This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
What's up, everybody? Welcome back. Another episode of Real Estate Investing 365. Today I got on here Joseph Bramante. He is from the Houston area. He is a CEO and founder of TriArc Real Estate Partners. They hold about 1,100 units in their portfolio. They got a construction company going on, real busy, doing big things. What's up, Joseph? Thanks for being here.
Hey, Justin. Thanks for having me.
Yeah, absolutely. So you're in the Houston market, Southern Texas, and I know you kind of have an oil background and everything. So before we get into your current company, why don't we dive into where you come from and how you got started in real estate to begin with?
All right. So we'll get into from the beginning, I guess, how I got started. So I'm actually an engineer by trade. Originally, I was trying to do architecture. I've always loved buildings. But architecture is really hard and doesn't pay that well, at least not until you're further in your years. And so I made a switch in college to engineering, and then I made another switch right before graduating engineering to oil and gas. As far as a career, I'd already had a job lined up at a consulting firm, and then Exxon came to town and interviewed me, and it passed. And there was quite a big gap between what the engineering company was offering me and what Exxon offered. So I decided to, oil and gas didn't know much about it, but I said, a lot of money, so why not? And I love to travel, and they certainly gave me an opportunity to travel. And so I was with Exxon for 5 years, I basically got my MBA from Exxon. They teach you like a whole, you got dozens and dozens of courses you take, that in-house training they give you on just like profitability analysis, cost engineering, and cost forecasting, project development, stuff like that. So I was taking all these courses, and I ended up on towards the last 3 years, my assignment, I ended up on like their largest project. It was a $22 billion LNG facility that we're building out in Papua New Guinea in the middle of nowhere. And I didn't even know where this place was. I had to find it on a map. And it's this little bitty tiny island that basically all of World War II happened over this general geography. And so it's really, a lot of history there. But, we're in this, I was living in this country for the last 2 years of the project. First year was in Australia, and that was pretty cool. But then the second 2 years I was living in Papua New Guinea, and took some getting used to. It was a little bit rough, but it was really cool because it was like living inside of a National Geographic magazine. You got to see like people like in tribal gear and face paint, like on your normal Monday morning, is to see that kind of stuff. So it was cool living on a compound and a lot of confined spaces, not a whole lot of anything to do. This is 2010, 11. So everybody had pretty good internet back in the States, but us, I feel like it was like dial-up internet. It was like super slow, and we're paying, I was making pretty good money for them. And my only expense, I remember this, my only expense was a $500 a month internet bill I had, and my maid service was also $500 a month. So my total expenditures are, just over $1,000.
They didn't even cover your internet?
No, internet. They covered all my utilities, all my housing, my driver, everything. I had a driver. I wasn't allowed to drive anywhere, and but the internet was on me. And I didn't know why I spent the money, because you couldn't use it for anything. You couldn't stream a movie. If you wanted to watch something, you'd start to download the day before, and it'd be ready the next day. It was just bad.
That's crazy.
So anyway, I did a lot of reading. You're off time. You work, and you can't watch TV. You can't do anything. You can't play on the internet. So I read, and at that time, I remember a lot of my managers were all talking about, again, this is 2000, 9 and 10, they're all talking about, like stock market, because they were all much older than me at the time. They were, I was 24, and they're all like pre-retirement age, or they're getting up there. They're just kind of padding their retirement nest egg, and some of them had already retired and came back. So quite a big difference in age. But I was paying attention to things that they were talking about as far as, they're investing in stocks. And for some reason, I just couldn't get the stock market right. I just kept plowing money into my 401k and my, I think it's called Ernest and Young. I got one of those brokerage firms. I just kept giving that guy money, and I wasn't doing so well. And also, keep in mind, this is just after the crash. So I don't think anything was doing that well. And but anyway, I decided to stop putting money in that, and then instead, one of my managers, he was my project manager. He was investing in these really like rough looking houses, like stuff that I wouldn't even live in. And I was just like, what are you doing, man? Like, this is, he was buying these houses in Houston, which I'd only lived for 1 year in Houston. I'm originally from Louisiana. I was born in New Orleans and grew up all over South Louisiana, and then moved to Houston for Exxon. And I was only there for about a year before they moved me away. So I didn't really know much about the Houston area. Very, very very limited knowledge. But anyway, this guy was buying these houses all over in the Heights area, and was kind of showing me how, or at least he kind of piqued my interest, gave me a little bit of knowledge, but not much. And I think this is, I could be wrong here, but I feel like this was like like a lot of these, bigger pockets and these firms, these websites that are pretty well established now. But I feel like back then they were, at least I'd never heard of them. So correct me if I'm wrong. But
no, I think that's
anyway,
the case. Yeah, for sure.
So anyway, he's talking about these things, and the only way I have of learning about it, since I'm living in the country, he's a rotator, so he gets to go. He works 4 weeks and he goes home for 4 weeks. I live there permanent, so in Papua New Guinea. So I downloaded some ebooks, and I read, and I think I was reading about 2 books a week. So they're 100 pages, not that long. But 2, I just got really into it, and just couldn't get enough. And especially like there's some of these books I was reading that were more like kind of problem solving, kind of mathematical. Like I just fell in love with the math side of the industry. And so I decided, one of the books I read talked about, like single family is great. Percentage wise, it's awesome. It's always going to crush it. But if you can get into multifamily, it's a higher barrier to entry, but you control the valuation. The valuation model is completely different. You're looking at appraised value versus income value. And so I did. I got with a friend of mine, fellow employee at Exxon. I said, hey man, I've been reading these books. Everybody knows that real estate's good, but I think we should make a play into multifamily. And actually, it was a one step prior to that. Another friend of mine, because my manager was buying all these foreclosed houses for dirt cheap, I said, well, if, one house is great, 80 houses is better. Let's try and buy like a bunch of these things, So we had this big, beautiful spreadsheet on how we're going to buy all these 80 houses. And my other friend, he was a rotator, so the plan was during his time off, he would find them and would buy them with our money combined. And so I kept calling all these banks. I must have called like a dozen different local banks in Houston to try and get a loan for $3 million to buy these 80 foreclosed houses. And most of the banks just laughed at me. They just laughed, and they saw this Papua New Guinea phone number and they thought it was probably some prank call. But it was legit. It was me. It was 25-year-old me trying to get a $3 million loan. And buy 80 foreclosed houses. And finally, fortunately, one of the bankers said, look, just buy an 80-unit apartment complex. And that's when I really got, I've read about it in the book, and I knew it was better because the book said it was better, but I didn't think I could actually buy one. I don't know why I didn't think I could, but I just didn't think I could. And then so I did some more reading and saying, well, it all kind of progressed to one day I reach out to these brokers and I said, hey man, I want to try and buy an apartment complex. And over the course of about 6 months of looking, me and my friend, we ended up finding our first apartment complex. It was a 26 unit property. It was, if you're familiar with Houston, it's right at I-10 and Silbert. It was a great location, which is probably, the one thing we did right in the acquisition was the location. We were buying it from a gentleman who, had just survived the crash, and he was retirement age. He was probably late 60s, so I feel like he was just trying to get out, and be happy he survived that whole ordeal. Bought it from him. It was actually 2 properties. I think combined it was 60 some odd units, and they had a street that separated them. So on one side of the street was the 40 some unit complex, and on the other side of the street was ours. He had already sold the larger property, and then the last one he had to sell was ours. And so we said, sure, well, we looked into it, and our original plan was just to buy it and just do some very minor updates. We knew it needed a new roof. We knew for sure it needed a new roof. And then the rest of the interior was just kind of paint, and that was it. It was very minimal. And our entire rehab budget was based on what the broker had told us, because I didn't know any better. How was I supposed to know what this place needed?
Yeah.
So I didn't think the broker would lie or, deceive me. Of course, he's not just trying to make a sale. No, I felt he genuinely cared about me, and maybe he did. But and I'm not bashing brokers. I just think that they've got a different perspective on what's possible with these properties. And so anyway, me and my friend, we buy this property and we get in and we use the bank we use is Bank of Internet USA, which I don't even know if they're around. I didn't think it was a real bank, but it was. It is.
I've never heard of it. Yeah.
Yeah, and we ended up using this insurance company that I don't know. There's just anyway. We'll come back to the insurance piece. So we use this other unheard of insurance company. The closing I thought was super easy. A lot of times with these books, at least with the books I was reading, they didn't really get into the details. And it's really hard to get into the details of like a proper closing because there's so many things that are going on. And, like just title is different in Texas than it is in Florida, than it is in Louisiana, than everywhere. So there's, that whole closing aspect is different as for what you guys sign. And then just what the loan docs are and reviewing that. And loan docs are going to be different from every lender you're going through. So just reviewing that. And then, so everything was new. And it's hard to read a book and be an expert on all this stuff because everything has its nuances to it.
Yeah.
So anyway,
sure.
But it was easy for us because we didn't do anything. We put it under contract and then we just coasted for 30 days until it came time for the money to go hard. And when we started processing the loan, but I feel like, I don't know what I did for the first 30 days of that property, but it wasn't what I was supposed to be doing. I think I was just busy working.
Yeah.
And that was part of the problem I had in the beginning because, Exxon kept me pretty busy.
Well, yeah, for
it was
sure.
cool because
Before we move on and dive into the details of that, I want to touch on something real quick. Is that you said you were calling a bunch of banks, right? And you said, 24-year-old me just calling, trying to get a $3 million loan. How many banks do you think you called?
It was about a dozen. Yeah. Okay. I remember it's funny because like I still have a relationship with some of them. And so it's just funny because I've reached out to them every now and then. I'll reach out to them after like a big transaction, and I'll be like, "Hey, not so bad, huh?" Yeah. Just because from them because they've known me literally from the beginning. I was the guy who was originally a single family guy and was trying to buy all these houses. So it's interesting, but also like I feel like their first impression of me is of this guy who doesn't really know much. And you learn, I learned, man, that the first couple of years, I was just drinking through a fire hose. It's just so
Oh yeah,
much.
there's so much to know. What did you say to these banks when you were first calling? Did you put together a PowerPoint and with your plan and your kind of little bio of yourself, or did you just like literally just call and say, hey, I want to buy 80 houses. I need a loan for this property. Like, what was your
Yeah.
pitch? How did that kind of go? If
I'm
you
embarrassed
remember.
to say I was probably a bit arrogant with my messaging because I think I just sent them my resume and I had a bit of an ego back then. Felt a little bit invincible, and a lot of these guys, most websites they have like contact us. At that time, people were more free with their emails than they are now, so it's pretty easy to go to a website and see like, oh, info at whatever, or I could just go to see who their team members were. They had their V card right there, and so I was just going to their website, getting their contact info, and emailing them and calling them. So I would email them my resume and say this is who we are. Here's our we're working for Exxon. We've got all this money, and we want to do these deals, and this is our experience. My friend had 5 houses at the time, so I feel like that qualified us to buy 80. But anyway, and I'd sent them our beautiful spreadsheet that I was so proud of, and I actually looked back at that spreadsheet about 2 years ago, and it was just embarrassing bad. And so
Well, I
I
mean, you
was
don't
just like,
know. You're trying. At least you're out there. You were trying to do something. You know what I mean? But the reason I bring it up is just because that's a lot of people have those problems now. Like if they're just trying to get started, or they've maxed out their conventional loan limits for smaller properties, or they're trying to contact banks to buy a larger property. It's kind of like people don't know what to say for the first time. So
yeah.
like now that and obviously you've done many deals since, like how should somebody reach out to a bank for the first time? Is there some specific things they should say or
If
like
this is
watch
your
out for?
first time, my advice, your first time, do not reach out to a bank. Reach out to a broker and let him reach out to the bank for you. Because the broker is used to dealing with people who may or may not know what they're talking about and knows how to, you know, a lot of problems is if you don't speak the terminology, you might know exactly what you're trying to say, but if you're not using the right or saying the right words and terminology, you're going to get written off.
Mm-hmm.
And so that's just from experience. You got to learn the language. And brokers, they speak the language. They talk in bips and basis points and LTV and stuff like that. So they can have these very high level conversations with bankers that, and while maintaining reputability of the client of you,
Mm-hmm.
of the prospective client. So I would say, until you've done a couple of deals, go through a broker, let them kind of be your translator when talking to the bank.
Yeah, for sure. No, I just want to touch on that real quick because I mean it ended up working out for you, but maybe there was a shortcut some people but again, maybe it worked out also because it was 2010 you
Yeah,
said,
absolutely.
right?
Yeah,
So
I mean it was fresh after the crash, and I make I absolutely give credit to just timing, and
yeah.
timing is everything in every industry. So you can't deny that if I were doing the same thing right now, it'd be a lot different challenge than doing it right after everything's rock bottom.
Yeah, it'd be a
Uh,
different challenge, but there was challenges then and there's challenges now. They're just different. So people got to
yeah, like the
understand that.
challenges back then were more around equity. Like, you were limited to 506B, which I didn't even know what 506B was. I just formed an LLC partnership and with a friend, and that was it. That was just me and him, and we had money.
Yeah.
But if I didn't have that friend of mine, I would have no idea how to raise money. It was I don't know. I was just fortunate that I had a very high paying job, and so I didn't know. So I feel like I didn't know how to raise equity, but I also get the impression that raising equity through syndication wasn't as popular as it has been as of lately. Even the past 5 years, it really kind of took off because you didn't have 506C. It was all 506B, and also, but the deals we had, so we had tons of product to buy. I bought my property for $25,000 a door. It was just a ridiculously low price. And, now I'm doing rehabs bigger than that. I've done 3 rehabs bigger than that already. So it's just,
Yeah.
crazy. I wish I can go back in time and buy everything.
Oh yeah, everybody does. Me too,
Yeah.
for sure. Okay, so you buy this first property, you get it under contract, and then you're just busy working. All of a sudden, the 30 days goes by. You don't know what you don't know. All of a sudden, the deal is going to come to a close, and the due diligence hasn't been done properly. You don't really know what's going on. You just end up closing on the property. Like, what was the next things that happened? What was the problems that you guys ran
Yeah.
into with this first property?
And just one thing real quick though, I think also one of our mistakes, so I know for sure one of our mistakes, was we used this Bank of Internet USA. Like most banks are actually in your court. Like they're there to protect you from doing stupid stuff. And so they've got all of these like requirements that you have to do to even get their loan, that if you just follow their steps, by default, you're going to have a good due diligence. Or you're going to have at least 60%, 70% of the due diligence done. Now there's a whole other side. I didn't do a unit walk. I didn't walk every unit. I don't think I walked a single unit. I personally never stepped foot on the property until 3 months after I owned it. But anyway, let's go back to the closing. So we had the property under contract. We do like some very minor due diligence, if you even want to call. We scoped the sewer lines. I remember we did that. That was it. We scoped the sewer lines and we got a bid for the roof. And then we went to feasibility, or we finished feasibility. Sorry, we're going into close. Yeah, and then we just closed the loan. We're just reviewing loan docs. Everything's kind of alien to us, so we're trying to figure that part out. And then it was a pretty simple process as far as like it was a pretty easy bank to work with. It was full recourse, 35% down, that also sucked. It was really hard to get good leverage back then, especially when you're a first-time buyer. I'm not sure if it's still that way now as far as first-time buyers and having decreased leverage. But we bought our deal at 65% full recourse. So now I see a lot of newer guys are buying at more market rates, 75% even on their first deal, which is good. But anyway, we closed this deal and everything seems to be going okay so far. And then I'd say at about we had gotten a subcontractor to do renovations in some of the units, and his scope was basically he was just going to repaint everything and then redo the kitchens for us, because at that time we knew we wanted to do some higher level renovation. And I apologize because I'm trying to remember, this was 2011, so it's
no problem.
decade ago, so
it
wasn't just the other day. But anyway, we had this small sub that we were self-managing ourselves, and he was doing some work, and I can't remember exactly what his scope was, but he for sure was ripping down sheetrock and stuff, and he was installing ACs. I remember that part, because part of the AC process to install them, we got to apply for a permit, because our units, the reason we're installing ACs, and this was pretty funny, is that inside every unit we had a window unit, which is pretty standard, right? But the window unit on the inside was blowing into a fur down. A fur down is the duct that takes the air conditioning, the cold air, and disperses it through the house. Well, they had created this kind of redneck sort of fur down air conditioning system with a window unit that would blow into it and then lightly spread cold air throughout the unit, because it doesn't have enough horsepower within that window unit to really push the air with enough velocity through the system. So anyway, we said, well, that's no good. Like, we can't tolerate that. We need, I think we were going to put ACs. We said we want to put ACs because those are bad. So it was part of that process. So we'd hired this sub. He was installing these ACs, and they go to apply for the permit. And part of the permitting process was to do an environmental, which normally is standard operating procedure that you do in our environmental phase 1 as part of the closing for any property. except us. We didn't do that because we didn't know to do that.
Yeah.
So
Well,
whenever,
it seems like
so
your
we said,
broker should have brought that up too. You know what I mean? Like the broker should have
you
known,
would,
but
you would think,
the broker has kind of a not good reputation here.
yeah, he didn't really help us out that much. So anyway, you get this environmental, and of course it comes back positive or hot for asbestos. We had just over the legal limit of 2% per million or whatever it is, asbestos, and it was in the joint compound. Property was built in 1964. Anytime you have a 1960 mid 60s property, 65 I think is the cutoff. Even there, plus or minus a few years, you should always be cautious of asbestos. So anyway, came back for asbestos, and then I remember just thinking, oh crap, like, what am I going to do? Like, I have 26 units filled with this. I mean, in my mind, I'm thinking, oh crap, it's filled with asbestos. It was funny because I had that email, like I received the email with the environmental study, and I forward it to my partner, and I say, "Oh, beep, blip,"
Yeah.
and it was just that was a bad day. But I had worse days in the near future coming. So we get that bad news, and so we're freaking out. We immediately send a letter to the contractors, stop work, get off the site, because at that point we're just trying to cover our butts. We don't want anybody coming after us because. It became real for us real quick when we got that environmental, because we had these guys with no protective equipment on, just tearing down sheetrock, dust is everywhere, and we thought everything was fine. Anyway, so we send them home, we take care of them, and then we deal with them. Then we start getting all these, inquiring phone calls and messages from them because they want to know why we sent them home, and so we're trying to manage that situation. But anyway, so we take care of that. And around that time, I think a few days later, on July 15th, I end up getting let go from Exxon, which was like terrible. So now I have a property that has 4 units that are with sheetrock ripped down that I can't rebuild because they have asbestos. So I'm at 85% occupied, and it was already barely, I think it was like, now at this point it's negative cash flowing, and now I don't have any more income coming in. So now, like, the money I have saved up is now going to keep this property going. And so at that point, I think the next day I joined a local real estate group and finally got the boots on the ground kind of experience, the hand holding I needed. And really more so just the connections, especially when you're local. I think you got to get those connections. I felt pretty comfortable with the knowledge already. I had that 30,000 foot knowledge, and the other, the ground level knowledge is harder to come by except through, one-on-one, like mentoring and going through courses and just doing it.
Mm-hmm. So you had moved back and were living in Houston at this time, huh?
Yeah, sorry. So I'd moved back. Yeah, well, no, I just gotten the news, like I was getting laid off, and got flown back to Houston because I was still living overseas. So yeah, it was a crazy, like, all this transpired like over a 60-day period between the notice for that, the layoff, and then the last kind of punch in the mouth was we got a notice from our insurance company that the insurance that we had bought was fraudulent, and we didn't actually have insurance. It was just a scam. So we got scammed out of, I think it was like $14,000 of insurance. It was, I don't know, I think, anyway, some guy just took our money and took off. So anyway, so that was not good. So no income, asbestos, and no insurance. So I joined this real estate group the next day, and it was a pretty hefty. I think I paid like 10 grand up front. I remember that I lost my job on a Wednesday. On Thursday, I met this real estate group, and I'm dropping 10 grand because for me, it wasn't like I wasn't in the position to question, like, I don't know, is this group legit or not? Like, there was like, I was in a position where like everything, I was against the wall. Like, I was like, either I'm dangerously close to just losing everything. I just made a whole bunch of money overseas, and I'm about to potentially lose it all on this stupid property that I bought. I don't even know. Now I was like, why did I even buy this stupid property? I was kicking myself.
So it wasn't a real estate investment meetup. It was actually like a mentorship group is what it was?
Yeah, it was a mentorship group. This was before Meetup. This is way before meetup.com.
Yeah.
This was, like we had real estate clubs, and they would teach you how to do this. And this particular one in Houston was focused primarily on multifamily. And so I went and joined their club and got that. I think the second day I had met my current partner, and we had sat down. She was a property manager. Part of the problem I had was I had hired because it was 26 units. I had hired this guy to manage it that was previously a property manager on single family homes, because that's just that was still a growing market, but he was trying to come into multifamily, and I didn't know any better. I thought, okay, single family, multifamily, whatever, same thing.
Yeah.
I thought multifamily would be easier, because I was like, well, man, if this guy can manage all these houses in these remote locations, then surely it'd be a lot easier for him to manage one building with all these units right next to each other. Like, that just seems logical. It was complete opposite. Like, this guy, it's a different beast. It's a completely different animal. It's a multifamily property management. It's a lot more hands-on than single family property management. So anyway, he's looking after this deal, doing a terrible job, and end up letting him go as soon as I joined that real estate group, and I hire my current partner, Carrie. And so we take over, and she, does the initial assessment, figures out, okay, let's kind of check our bearings. Let's see where we're at. And we came up with a plan. And it was a little disheartening, because I joined this group, and I'm sharing with all these members, like, this is my situation. I need help. What do you recommend? And she was the only person in that organization, that club, that actually had a solution. Everybody else's solution, or had a viable solution. Everybody else's solution was, yeah, that sucks. Sell the property, take a loss, and don't do that again, basically.
You're like, well, I can't do that again. I just left my job, and I'm going to lose all my money on this damn thing. So that's not really an option.
Thank you. I was like, I'm not about to lose like the first $100,000 I ever made and on this deal. And anybody who's made that saved up that first 6 figures, and you see it in the bank, and it's
makes
a special
you happy.
moment.
Yeah, heck yeah.
Well, anyway, I was getting ready to lose it all. And funny story. I remember the day, like, I'd only had that 6 figures in my account for like a couple weeks. It was still, I was pretty active in my investing. And I remember the day that we bought the property, and all that money just went out. And I had this sickening feeling in my stomach. Like, I was just, felt so terrible. I was just like immediately questioning every decision. I was like, no, this is a bad idea. It's a bad idea. Give it back. But anyway, it's too late now. I already jumped out of the airplane.
So you guys,
anyway,
so you team up with this gal, Carrie, right? Is her name? And then she says, okay, we can fix this. Like, let's get a assessment of what's going on, and we'll set up a new game plan. So you end up, turning the property around, I assume. And then what was kind of,
her plan wasn't that, I mean, it was a plan, but the plan basically was like going all in. It was like this was one of those situations where you could just throw more money at it and solve your problem. And the solution was, all right, look, I know you planned on doing a $3,000 per unit renovation. The final estimate for what we ended up doing was over $30,000 per unit. Jeez. We were going to go in and vacate the entire 26 units and gut it and completely renovate it, all add ACs, add washer and dryers, all new flooring, all new cabinets, granite counters, all new fixtures, the works. The only thing we didn't change out was the plumbing. But even that, we changed out a lot of the plumbing because we had to get the washer and dryers. Added some new electrical to support the washer and dryers. It was a beast, especially for my first one. Like, it was it was too much.
How'd you end
But
up
we
funding all
survived.
that?
Huh?
How'd you end up funding all that?
Well, I had a 401k. I cashed it out, and I got another lender who who took my 401k. We put up additional equity, me and my partner, and they gave us a bridge loan. And we convinced them that we were going to do this, and it worked. They believed us, and so they gave us a loan, full recourse. So they're like, what do we got to lose? They got all this money already, and anyway, they and at that time, my other friend was still working for Exxon, so he had strong income, and I had just gotten a job at an oil and gas sales position. So I was unemployed for about 6 months, and I'd used that entire 6 months. I just threw myself into real estate, and just like every but every real estate event I could go to, and training session I could go to, I was there. So hold on one second, let me turn this off. But yeah, it was anyway,
Stressful.
6 months of learning. But anyway, so we had strong balance sheet. They gave us a loan, and basically they mostly gave us the loan on our balance sheet. Or yeah, I'd say that probably 60% balance sheet, 40% they believed in our plan. But anyway, they gave us the loan, and we went and we executed. And it was a year-long process to get the whole thing done. And because of the shift, because of we were going from $500 rents to $1,200 rents, so we're more than doubling the rent. Those profiles didn't mix, so we had to, when you're doing such a drastic renovation, you have to vacate the property and then lease it back up. It's called releasing. So we did that, leased it back up, and I remember the whole time going through that process, just like, Elon Musk has a quote. It says, being an entrepreneur is like, it's like chewing glass and staring into the abyss. And I felt like that's what I was doing, because I was just fingers crossed, praying this works. Like the numbers, the data, everything says it would work, but it's just on paper,
Yeah.
and all the books said it's going to work, but again, that was just books. And finally, we reached the end of the line. We leased it all up. We go apply for the refinance, and we get a great loan with Freddie Mac. We got over 207% cash out on the deal, and that was the day I was like, "Yep, this is for me. I can do this. I could do this again. This was fun."
Right on. Yeah, that's awesome. Like most people would have just like, well, first, most people probably would have just sold out and just like cut their losses, like all the other people were telling you to do. But second, most people, after going through that whole process, probably would have been like, man, screw this. I'm not doing this again. It was a nightmare, whatever. But you kept going. So you went from there and you decided to like go full in and just do multifamily syndication, or what was your next steps?
Well, yeah. So I used the success of that project kind of as as we used that project to attract other investors, because they saw, wow, like this guy, he did this amazing renovation. This was our story, and they said, well, if you can do that on that property, then so we had a good following, and we went and we bought about 4 more properties, about 1 per year, and then we've just been growing. We bought 2 properties last year. We had took a year off sort of in 2016 or 2017. We were focusing on new development. We decided to, 2017, we'd just come out of the oil crash, and things were, prices were really high, cap rates were still compressed, and we felt like, we wanted to get some experience, or start getting some experience in the new development ground up sector, because, real estate is cyclical, right? Everybody knows that. And typically the cycle, the phase of the cycle where it makes sense to develop is not necessarily the phase of the cycle where you want to be buying. There's a lot of overlap there, but we felt like being able to do both would give us a lot more flexibility into being able to, like when the market's hot and we can't find a deal to buy, we can find land to build on. And so there are areas, so there's a lot of overlap, and it just created more opportunity for us. So that was That's kind of how things evolved. In 2016, also we officially rebranded and formed Triarch. I think before that, most of these guys coming up, they'll have this similar experience where like at one time, the first company was SIG Investments, Shared Interest Group Investments, because it was me, Carrie, and we had another partner that ended up not working out just personality conflicts. So we did 2 deals with that group or with that partnership, and then we all split off and kind of did our own thing. And then so I formed the Atlas company, and then she had her company, which was Kindred Residential, and they did strictly property management. And we bought a deal that way, and then we came together, just me and her partner, and we merged the asset management company, the Atlas company, and Kindred Residential to form Triarch. And then just recently, earlier this year, we formed Triarch Construction so that we can go ahead and renovate properties, as well as down the road, like to start building properties ground up. But we've got a really good team. Our construction guy we've been using for several years, and my partner Carrie, actually, we like Robert, who runs our construction division, because he used to work in property management. He used to work for Carrie, and then I guess he saw the light and said, "Man, there's a whole lot more money on the construction side for multifamily than for the property management side." So he switched over and started his own construction company, and now he's in-house part of Triarch. But it's great because he has that mindset already with property management. He knows what we go through.
Mm-hmm. Yeah, no, for sure. That's awesome. So you guys have obviously got your systems all figured out and learned what to do and what not to do, because it's been obviously tremendous for you guys. So you guys focus just on the Houston area, and are you thinking about going outside of the Houston area?
Yeah, we've got a couple of properties out in Corpus. We like the Clear Lake market. But for now, like part of our competitive edge is that we've got, just on the operations side, our Triarch Living, our property manager company, has 70 years of property manager experience exclusively here in Houston. So there's not a property that they either haven't managed or managed a property next to it or know somebody who used to manage it. And that really goes a long way, especially when you get into these tighter markets, from buying bad deals. Like I see people buying, these out-of-state guys buying deals all the time in Houston that none of us local guys would buy, because we know better. We know that it's a crap market, or we know that that particular sub-market has these issues, or that particular property has had these issues in the past. So especially even more so now, we just had Harvey, or 2 years ago, so we had Harvey.
Mm-hmm.
But everybody who was here, who went through that, remembers all the areas that flooded and whatnot. And so you've got a risk of nothing. Now it's still pretty common knowledge which properties flooded or not, but certainly down the road, as we get further and further down the road, people who are out of state buying are not necessarily going to remember which properties flooded, and eventually the brokers are going to stop putting it on their OM. And so you get into, so that's part of the history of like knowing, when a property floods, there are certain issues that it's going to have.
Yeah.
So anyway, that's, for us, we feel comfortable staying here in Houston. And then, eventually, once we get our portfolio up to over $1 billion, we'll most likely look at going elsewhere. But I think that when you go outside your own market, you certainly open yourself up for risk. And that's just not, I know people do it. I know they do it really well. I know a lot of first-time buyers who don't necessarily have a good market in their backyard will go buy elsewhere, and they do it well. But for us, because we've been fortunate enough to be located here in Houston, and then also we've got Dallas just north of us. So, it's, Dallas and Houston, it's a 3-4 hour drive, depending on who's driving. It's easy to get to. So for us, we feel like we've got enough in this immediate area to keep ourselves pretty full for a pretty long time.
Yeah, for sure. So what are some tips for people that are trying to, maybe they're trying to break into the multifamily market, and they might have a good market that they're going to invest in, But right now it seems really hard to get brokers to take you seriously. And I've asked this to a couple different people. So how can somebody kind of talk to a broker if they're new? Like, what should they say or what should they not say? Is there any advice for that?
Yeah. Um, you know, I think honesty is the best policy. As cliche as that sounds, like for example, today there was a deal that came across my desk, and I was straight up honest with the broker. This was like a 2015 construction deal in the Galleria area, like gorgeous, and it was 100%. It was like 300 some odd units, but it just screamed institutional money. Like it was nothing that I would buy. It was something that some insurance company is going to buy for some super low cap rate and some super low returns.
Right.
But I was curious because it looked really nice.
Yeah.
And so I just said, hey man, like this is out of my league, but just curious, what is the cap rate on this deal? Because I just want to know. And it's actually, he said it was trading at a 5%. So I might look at it because that's, for that vintage deal, for being so new at 5%, I don't know, we'll have a look. But anyway, honesty. So I think if you approach a broker and be like, look, this is my first deal. I'm not going to take up too much of your time. And just, be respectful of their time. Don't hit them with 1,000 questions, because you got to understand they've got a lot of people. So I always try and be respectful of their time. And I'm very quick. I'll tell them yes or no on a deal. Like I'm either interested or I'm not. We toured this massive deal last week. It was over 1,300 units. So it was like
Man.
it was an $82 million deal.
Wow.
And we ended up passing on it because it was 1960s and the trend was not good, and it was just, I don't know. I don't even know why we toured it, but it was just it had a lot of potential there. But anyway, the point is, I toured the property. 3 days later, I told the broker, hey, we're going to pass on this one, but thank you for the opportunity. I didn't pretend to be interested or anything like that. I just, real quick. And I think that, because these brokers, they're working, they're trying to make a sale, and they're going to appreciate somebody who's going to say, yep, I have a realistic opportunity to buy this, versus somebody who's just going to string them along, who, I was working pseudo, I don't know how to say it. I know of an investor who basically had asked me to look at a deal for him, and we're friendly with them. So I said, sure, I'll have a look. But they put this deal, like they're offering on this deal, they don't have any of their money lined up. They don't have the entity form. They don't have a bank account open. They don't have anything done. They just saw an OM via email, but there's no background. So I would say I was just like, man, like you do realize like there's like when you sign that contract, there are 1,000 other things that you're working on, and the last thing you want to be thinking about is, oh man, I got to open a bank account. I've got to negotiate the limited partnership agreement with all my investors. I got to raise all this money. So I think, it's certainly a challenge, and the money thing is a different situation, right? Like I understand, I haven't gone to a single deal and had all the money to buy that deal. I have not purchased a single deal that I had all the money I needed to buy it from the moment I signed a contract.
Yeah.
So I don't want people to think that, oh, you need to have all the money. But I also don't want, I think for first time guys, you should have at least half of it, a good portion of it. And then as you get more and more experienced, you can have less and less money. And I think I bought the last deal, we just had a couple $100,000, and we ended up raising 8.3 million by the time we closed on it. So it was, we were really pushing it to the limit, and I'm not going to do that again.
Yeah.
But that was just an amazing deal that we took down. It's a 40,000 per unit renovation. It's our largest renovation to date. And when I saw it, I was like, there's no way I'm letting this one go. So I just put it under contract. We had money on hand, and then we figured out the money. But yeah, for first time guys, try to get half the money, at least. I think that's a good rule of thumb.
Yeah.
And then And then, one of the things I see people doing well, I think, is partnering. I think I see a lot of these JV things going around. And, for me, when we do our deals, we only typically have like one JV. And typically it's just going to be that one guy who's like bringing a lot of the money. Because for us, that's the JV, that's what we're kind of lacking. And I think that's what most syndicators are lacking is the equity, right? Is, that whole piece. And that's what's not what I like to do. Like I like to focus on the deal side of it. And I don't really want to get into I don't care so much from the salesy investor side of things. I'm kind of a deal junkie. I like to underwrite them and solve the puzzle, so to speak, and how to make this work.
And that's the next kind of thing I was going to say is that I was going to ask if you guys are if you're still part of a mentorship group. I mean, at this point, you're probably kind of beyond that, but that might be, it's seeming to be more and more vital to be part, like whether you JV with somebody or join a mentorship group to where they have all the, the information that you might need to contact brokers for the first time and get into that first deal.
I can't, to answer your question, no, I'm not part of any mentor groups per se.
Mm-hmm.
I am a member of CCIM and of ULI and of Houston Apartment Association, stuff like that. So we're kind of involved in the industry. And we've got, I'm the least experienced person in my company. So if I have a question about something, I go talk to one of my partners. Yeah. They've been doing this for 20 to 30 years. So when it comes to that, we've got a lot of knowledge in house. But I'm fortunate. I understand not everybody has a partner that's been doing this for so long that was interested in partnering with them. And from what I've seen, I see a lot of these guys out on podcasts and doing these different kind of like online meetups and online kind of seminars, which I think I love the technology side. It's so cool that people are able to meet from all over the world and country and have like an online conference to learn. But also understand, I can imagine it must be pretty hard to meet somebody and say, hey, you guys want to be partners? It's I'm sure it has its own challenges, and I can't speak to those challenges. I can just imagine that it probably has some challenges to it. I would recommend, what helped me in the beginning was just looking at deals. I've archived every deal I've ever looked at. We've got an archive of over 500 properties here in the Houston area. And I've underwritten all of those properties. And so it's, I think that for me, my biggest advice would be to get really good at the underwriting. Mm-hmm. Because I see a lot of people, they make these just foolish assumptions, like they're, and there's information out there. I mean, there's a lot of courses you can take. I saw a course, this group called CAR, KAHR or something, or anyway, they do like every month they've got like a 2-day workshop that you can do it online or in New York. And I'm not trying to promote them or anything. I was just saying I was on their website, but I mean it's like $800 something bucks, but still, like I looked at what they're offering, and you leave that seminar with like all the things that they're talking about that their model will do is what ours does. And we've got a really good model. I'm not trying to toot our own horn or anything, but we've had lenders tell us, wow, your model is really good. Sure. So I think that especially now, so I started in 2011 when you couldn't afford to make mistakes, right? Like you could buy a property and think that you were going to spend $3,000 a unit and actually spend $30,000 a unit and be okay. You couldn't make that same mistake now. You would be toast. And so because we had, we were buying at properties at $25,000 a door, whereas now those same properties are $75,000 a door. And that's no exaggeration. That's exactly what they're worth. So it's, your room for error on the underwriting side is drastically reduced. I mean, you've got to be more accurate, and if that's not your forte, if you were like, man, if you just really suck at Excel and numbers and stuff like that, then partner with somebody who's good at it, and then, but also like question them, like challenge them, like, okay, you say you're good at this, but how do you know you're good? Like, how do you know you're accurate? And here's one of the tips for those who are trying to test their accuracy. And this is what I did, and this is how we improved our model and got really good, was that we would start underwriting deals, right? Like, and brokers, they give you this data. Like, you sign a CA and they'll give you the financials and you can underwrite the deal. Like, there's nothing stopping you from underwriting it. And then you just, even if you don't have a chance at buying it, but you say, that's a great deal, and one day I'd like to buy a deal like that, get the financials, underwrite it, and then stay in touch with the broker. And you say, hey, what is it trying to trade at? And they'll tell you the trading price. And then you say, look, and maybe you don't say this part, but so anyway, you just underwrite it. And then check in with them 3 months later after it's closed, and you say, hey, what was your final sale price? And where did they trade at? And then they'll tell you what they traded at. And then you can say, okay, if this buyer paid this much for it, and my model is only here, I've got to figure out how to, either this guy completely overestimated, or I'm completely underestimating.
Mm-hmm.
So you can use the market to kind of help you improve your own model for free. It's just, you got to put in the time and the sweat equity, or the guy you're partnering with has to put in the time and the sweat equity to get good at it.
For sure. Yeah, no, that's a lot of good insight and understanding about all that, and how to kind of get proficient and talk to brokers. And that gets yourself in the door and makes the brokers think you're more serious also. And then they'll continue to send you more deals down the road. You touched on it a minute ago, kind of like where you guys are headed with some development stuff, but what is the direction of you personally and then the company? And like, are you going to continue to do more of these bigger deals or just do development? And you had mentioned the construction company. What's your guys' future look like?
So for the company, our future, we're trying to buy 20,000 units in the next 10 years. We're not trying to get crazy. We feel like it's a doable thing that has us buying 3 to 5 properties a year. We bought 2 last year, so we think we can hit that, keep up with that trajectory. And then also we're multi, what do you call it? Kind of multifaceted, so to speak. We've got a lot of different weapons or different, offerings and services to offer. So, instead of just doing strictly owner managed deals, we have, one of the things I acknowledged was, I've got this wealth of property management experience sitting right next to me, and we're not, the biggest bottleneck is me on the owner management side, because you can only buy deals so fast, but I can pick them up a lot faster on the fee manager side. You can fee manage more deals in a year than you could ever owner manage, because all it takes is you're just signing a piece of paper for somebody. Versus owner managing.
What do you mean by that, fee manager, owner manager? You're saying like hire out a property management company, like a big corporate one?
For the first 2 years of Triarch, we said, we're only going to owner manage our stuff.
Okay.
And then, we were growing, but we wanted to grow faster. So we said, okay, well, let's look at fee managing as well. So fee managing is when we will manage the asset for somebody else. So say like you, Justin, are looking to buy something here in Houston, but you don't want to manage it yourself. You don't have the experience to manage it yourself. Or I'm not saying you don't. I'm just saying it's hard because you're remote. You're not in this area. So you would then hire somebody like us to go in and manage that property for you, and then we would then report to you. Because that was what my 2 partners were doing before I met them. Is they've been fee managers their whole lives or their whole careers. Most of their lives. My partner Carrie's been doing it since she was 18, so she's been doing this for just a minute.
Yeah.
But yeah, so we started growing that, and then as I mentioned earlier last month, we launched our construction company for also similar reason that we're really we got a partnership with a company we had a partnership with this company, Fast Forward Services, FFS, that from our experience that we bid them out, we would always try and get competitive bids, but their quality, their pricing, and just the relationship we've had with them and their responsiveness has just been top notch. And then so earlier this year in January, we formally partnered together and launched Triarch Construction because of, they've been mostly single family construction company, and they've just got a handful of multifamily clients. But some, like we're like their smallest multifamily client. They got much larger multifamily clients that they service, and that's it. They don't market or anything. And I said, well, why don't we try and market it and try and grow it into a large multifamily construction company? So we partnered together in January, and so now we're growing that. And one of the things that we offer that's unique is that, so say you're, again, it's to pick on you, Justin, you're coming to Houston and you found like just the most amazing value add deal. You would engage with us. Well, first, let me kind of back up. I want to touch on this for a second. One of the biggest mistakes I see people make is like, yes, value add is great. We all know that value add deals are very profitable. But one of the biggest mistakes I see people make is that they will undercut the CapEx improvements, meaning they just won't fully estimate, or either they just don't know, and so they'll underestimate the CapEx, or they will know and they'll intentionally lower it or lower their contingency because it's not as attractive to sell. Typically it's not going to improve your returns to have a large CapEx item. Right. But the downside is you get into a property and then you have somebody come in and tell you the reality of, okay, well, you bought this property thinking you were going to spend $75,000 on paint, and you actually have $150,000 on paint or siding, and now you've completely shot the whole project, and you're having to do a cash call or what have you. And they end up in those situations because either the information they got from the broker or from the contractor who was trying to win the bid originally just gave them a lowball bid, or hopefully this never happens, or they'll know that they'll think that they can renegotiate the bid and get it lower because they got some high bid, and they don't want to accept the reality of that it's really cost this much, which we see that happen where we've that's a long story, but it has happened before. Yeah. Where people, for some reason, you give them a number, or they've been given a number, and they think, oh yeah, well, I thought we could negotiate that down. And anyway, it's
so you guys pretty much, since you have all your experience, it makes sense for you guys to have your own construction company because you know what the actual costs are going to be. You know how long the renovation is going to take. You know how to like manage the property and the tenants while doing all the stuff. So it was just kind of like a natural progression for you guys to like start a construction company along with the property management side to really help yourselves and help other people as well.
Yeah, because the hardest part on value, not the hardest, but one of the hard parts on value add, which we do really well, I believe, is the interface between operations and construction. It's just managing that. You got to renovate unit 101, but their lease doesn't expire until this time, and maybe they skip. So they skip 6 months ahead of time. That totally screws up the whole schedule. And so you got, everybody goes into these big value add projects and this beautiful plan. They look at the lease expirations and they can plot it all out and everything's great. Then they close on the deal in the first month, they have 10 skips, and then everything goes out the window, and they're just in a fight for their life trying to figure this whole thing out. And we've been in that situation. Just the last deal we bought, the property flooded at the end of the day when we closed. So we closed in the morning. That evening we had this storm came through, and Houston's always flooding. Well, we flooded and lost 22 units. And so immediately, we had this beautiful plan like everybody does, and we got punched in the mouth right on day one.
Yeah.
And, but we're fine, we recovered. And, but I think that's, not everybody recovers from that. A lot of people don't recover from that. Mm-hmm. And so that's what we help them with is say, look, you can let us help you with this, because our construction guy and our operations team, our operations lady, they sit next to each other. We have
Yeah.
weekly meetings, so they're talking in real time what's going on. And part of the issue you have is whenever you as a syndicator go out and you hire a general contractor and you hire a fee manager, most likely they don't even know who each other are. I mean, you're lucky if they've met before.
Yeah.
And so now it's teamwork, and you're trying to get this team to work together to work on this very schedule intensive kind of orchestrated effort. And if they're not all talking together, you're going to end up in trouble.
Yeah. No, that makes sense. No, I think that's a great strategy going forward, and probably like it's a gap in the marketplace that is definitely going to be filled by you guys, which is going to be great for you and the people you end up helping. So, well, that's awesome. That's tons of good information. I'll move to the next section real quick. Here is, so what is kind of your best resource to like learn about whether it's multifamily or learn about new aspects of real estate, kind of when you were getting started? What was your go-to resource?
Well, for me, when I got started, books. I think I like books because when you read books, you don't look foolish, right? Like you can ask questions to a book, and it's, you can read the book, so to speak, and you'll get the whole thing through, and you'll be able to basically solve most of your questions. So that whenever you go to an actual conversation with somebody about real estate, you've got a good base level of knowledge. Versus if you come to somebody, like if somebody comes to me, and I've had this happen many times, people come to me and say, hey, well, I'm mentoring. I've already got a pre-drafted letter I'm going to send you. And I was like, here you go. Do everything on this list first and then come back to me. I've yet to have anybody come back. And all it is, it's everything that I've done. I'm not asking them to do anything that I haven't done already.
Yeah.
It's read these books, take these courses, then come talk to me. But nobody wants to do that. Or maybe they do that and they realize I know everything I need to know, and then they don't need me. So all I do is I don't want to get into the mentoring business because that's not my interest. I mean, I like to help people, but I don't want to like be a teacher or anything. But I think for sure, if you're starting out, read a book, or I guess nowadays the modern thing is to watch a podcast.
Yeah.
But I prefer books because to write a book, it requires structure. So everything's going to flow. Unlike like right now, our podcast has been all over the place.
Yeah.
So I don't know how somebody's going to learn listening to everything, because we're just all over the place talking about whatever. Whereas if you buy a book that's on multifamily analysis, for example, it's going to start and it's going to end, and it's going to walk you through how to do this. Versus if you watch a book, or if you watch a podcast or a webinar, it's going to be faster paced.
It's just an overview. You know what I mean? It's kind of to get the wheels turning and get your juices flowing and a little bit motivated, and then find out the direction you're going to go. But it definitely needs more education, maybe books or courses or something like that. So yeah, for sure. I hear what you're saying.
And then the other one though I did, so when I moved back to Houston during my 6-month kind of period when I gotten laid off and I was unemployed, I took a boatload of these CCIM courses, and I'm actually going to be getting my CCIM accreditation here in about 2 months or 3 months. So, but anyway, for those starting out, I think CCIM is a great resource. And then I like it particularly because you can, if you go through the whole educational path, you end up with an accreditation that now, if you meet somebody, they see that you're so-and-so CCIM, they instantly know what level of knowledge you have, and you've got this instant credibility of, okay, this guy knows what he's talking about. He's not,
sure.
He hasn't, versus you attend just some seminars or whatever, it doesn't really mean much.
Yeah.
Plus, I like it because part of getting the accreditation is like I had to learn about office underwriting and retail and just stuff that the whole spectrum of commercial real estate that I honestly wasn't too interested in. But it's nice to have that, like I'm somewhat knowledgeable on those, and I can have a conversation with somebody about retail or office, at least more so than I could before I took that course.
For sure. Yeah, no, more knowledge is always better. Well, what about a favorite piece of technology that you use in your business that makes life a whole lot easier?
Yeah. The past 6 months, we've been really heavy on this uh, technology called Smart Sheets. It's project management software similar to like Pipedrive or Asana or there's a bunch of those. They're all very similar, but this one's fully customizable. And so we like it for that reason because we're able to create dashboards and like we've converted our entire weekly report into it, and all of the weekly reports for all of our properties then roll up to a dashboard that we're able to see every property. Um, and we then rank our properties and kind of created like a leaderboard amongst properties that all the managers can see, and they get to talk crap to each other about who's number one and who's the bottom, and
Yeah.
nobody wants their property to be at the bottom. So we've and that's just one area where we've used it to help on the management side, and also we use it to share, like all of our investors have access to their properties or a version of their properties weekly report that they can open at any time they want. It's a live document, and they can see how the property is doing. Because I feel like weekly reports are really the heartbeat of a project, and most investors are going to get their monthly reports, which is just a spit out of just numbers and data, and doesn't really mean a whole lot to most people.
Sure.
Versus a weekly report, it's all that basic stuff that people feel like they understand. So anyway, it's Smart Sheets.
Smart Sheets. Okay,
Smart
cool.
Sheets is pretty cool. We like it.
All right. Well, right on.
Yeah.
So where can people find more about Jesse and your company and get in contact with you if they have any questions?
So they can find out more about Triarch at triarchrep.com. Myself, Joseph Bramante, on LinkedIn. I'm pretty active there. They can email us, info@triarchrep.com.
Triarch Rep REP.
Yeah,
Okay.
TRIARCREP.com.
Okay.
And that's the main, LinkedIn's probably the best spot to reach me there almost every day. And email as well. It's pretty decent.
Right on.
Yeah.
Well,
Yeah.
Jesse, thanks for being here. Appreciate it. There's a lot of, pretty good information, but like you said, and I believe too, it's not here to like teach you exactly the ins and outs of how to get into apartment investing or like move to the next level, but it gives you that kind of overview, and then, take the next step and continue your education and make deeper dives all the time. So I appreciate you, man.
Yeah.
Thanks for being here, and have a great afternoon.
All right, you too. See you, Justin.
Thanks. Bye.